Have you ever felt real fear just before you enter into the market, or when you're about to be entering into the market, you actually feel like proper fear? That is basically a sign of maybe a couple of things that we're going to be covering in this lesson. Basically, you may be feeling the fear for a couple of reasons. One of them could be that your account size is too big, and what you're risking, you're just not comfortable risking yet. You may be risking $100 a day, but every time you go to press buy or sell, you're feeling a little bit scared because you don't actually want to be losing $100 a day. That's absolutely fine, because the likelihood is we're still beginners into this trading space. We haven't taken hundreds of trades. We are still learning the process. We are still managing our emotions at the same time. If your account size is too big and that is why you are feeling scared before entering into every trade, then just tone it down a bit. Again, like I said earlier, we're not trying to be making hundreds and thousands of dollars within our first year of trading. We are learning the skill of trading before we are looking to make money, before we're even thinking about money. So if you're implementing a risk management system that has you risking more capital than you would actually feel comfortable with, then just lower it. There is no shame in that. You don't have to show anyone what you're making in trading. You're learning how to actually trade. The importance is not on the money. The importance is on ourselves, because we need to master ourselves before we can master the charts. So even if you don't think it's because of that, maybe just try it. Like, drop down half your risk even. Just see what that feels if you're still scared of entering into a position, or if you're absolutely fine after that. If you feel better when you drop down, then there you go. That's the issue. If you're still scared, then it's probably because you haven't backtested your strategy enough. We should have a trading plan and a trading strategy set in place that gives us the confidence every single time we enter into the market. Obviously, we understand the risk that we are entering with, and we know and accept that I'm risking the $100 a day. I could potentially be losing that in this day. But I have my trading plan and my trading rules set in place that I feel comfortable doing so, because I know that the outcome could be favorable to me and end up going in my direction based on my analysis on the charts and what I think the market could potentially do. Obviously, you can have all the technical analysis in the world. It doesn't guarantee a win. I keep saying this a lot, but there's a story actually that I've heard from a very famous trader, actually, Mark Douglas. You've probably heard of him. If not, he has a couple of books, and he's got a few videos on YouTube as well. I definitely recommend watching his videos at the same time. They definitely helped me. And he talks heavily about psychology. But basically, in this story, he was explaining how there was a young trader. This is before like all the technical analysis was like really a thing, which is how we trade now as retail traders. So trading was a thing back in the day, and they used to actually be able to trade the price of potatoes. That's how long ago this was. Potatoes was on a chart, looked like this, right? So technical analysis was coming into play, where there was obviously signs of patterns on the chart. Price would do certain things, and it would do this. You could basically predict the future, and the probability of it happening was high. Basically just our edge in the market. There was a guy who, I don't know the full details of it, you'll have to watch his videos, but there was a guy, and he wanted to basically show trading the technical analysis to a big hedge fund or a big trader, right? A big potato trader, okay? He went up to him, showing him all of his technical analysis, how good is this, blah, 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 showing him a load of examples. The guy wasn't buying it. He wasn't having any of it. He was like, he didn't believe in it. And the guy trying to sell it to him was basically just saying, like, why? Like, yes, it doesn't hit every time. Look at this, though. I've shown you that I can accurately predict what may happen in the market. And the guy goes, okay, well, let's take a look at live price then. So they jump on the charts. The guy takes a look at it. He says, okay, based on this, I think the market's going to go long from here. The guy goes, okay, let's see. Tells his guy, I don't know how this works, but tells him, sell 10 million shares of potatoes right now. What does the market do after selling 10 million shares of potatoes? Oof. Absolutely dump the market against that guy's technical analysis of what the chart was doing. The guy looked at him and went, you don't know that someone else could have done that at that time. And that's 100% true. That's why no one's strategy is 100%, because it can't be. Because every single trader in the world, in order for your strategy to play out, you need X amount of traders in the world, X amount of banks, institutions, to be basically pushing the market in that direction. And then all it takes is one big player to do what the guy did with the potatoes, sell 10 million shares of potatoes, dumps the shit, boom, gone. And that's of course why we follow our trading plan. But again, you can't have fear because that shit can happen. Based on as long as you're trading your plan, risking a number figure that you're comfortable risking and losing for the day, because you got to go into the market and just think, okay, by entering this trade, yes, I'm confident in my strategy, but the odds are I can lose. I'm comfortable losing $100 today. That's absolutely fine because I know as I'm learning, trading is not my main source of income. I have a job. I'm making more money every day. I go to my job, I work, I come home, I risk some money on the charts. Obviously, don't risk everything that you have. If you're making $100 a day, risk like $10 a day. I don't know. Just break it down so it makes sense and you're not financially struggling while you're trying to learn this, or trade on demo, like I've said to you before as well. But basically, get to a point where we're risking a comfortable amount and we're not scared to be entering the trades while we're following our trading plan. Obviously, though, we want to eventually be building up our capital and gaining confidence that we can trade with higher capital in order to make more money. But obviously, we will end up losing more money. What we want to do there, kind of circling back to what I was explaining in a couple of lessons ago with the basically where we want to take our trades in terms of starting on demo, then going to $100,000 prop firm, like whatever it may be that you've set out your order. That's what we want to do. Pretty well, we want to start at a small enough margin that it doesn't affect us emotionally, just to get used to the trading, get used to what we need to do each and every single day in order to be successful. Then from there, we're going to implement a bit more money where now we can see the dollar figure and it's like, okay, this is a kind of hefty amount. Just to get used to blowing some of your money, to get used to winning higher amounts of money, because whether you win or lose, you got to act the exact same way. It doesn't matter. You basically got to be able to win $5,000 in a day and not give a shit. And then you got to be able to lose $3,000 in a day and not care. You cannot be caring about the dollar figure. You think there's like millionaires, you think there's like big boy traders that are going there, sitting there, having a trade win and going, yes, I've done it. I've got another win. No, because they know it's a fucking Tuesday and they got the rest of the week, which can just annihilate that entire win plus some. It does not matter. You got to look at trading in a longer term outcome. You can't just look at it as day-to-day results. You win, you lose, you lose, you lose, you win, you win, you win, you lose, win, win, right? It's random. The outcomes are random. You don't know what you're going to get on any particular day. Every single outcome is random, but that's why we should look at it instead of day-to-day, maybe week to week, month to month, year on year. Obviously, year on year is a bit hard because we don't have a full year of trading under our belt, but we should have at least a week plus under our belts by this point, maybe, depending on how quickly you actually go through these videos. But basically, don't look at the results as day-to-day things. I gotta double check. Am I talking about this later on? I think I am. Handling wins and losses. Yeah, I'm talking about this a bit later on. So for now, we'll run it back, get back into the fear, right? Because we're still talking about the money that we're actually risking. That induces fear into you if you're not comfortable losing that dollar amount. So risk a dollar amount that you're comfortable with losing, and that way you're not going to be scared entering into the market as long as you're following your strategy, and risking an amount we're comfortable with are the two things that eliminate fear straight away. No questions asked. There's nothing else to do. Just do those two things and you will no longer be scared of entering into the market, because you should know that based on your strategy, XYZ could happen, and based on your risk, you already, in your mind, you basically got to have like 10% of your account already blown. Because maybe even as we're trading, think I've put $100 into this, think of it as already gone. You shouldn't blow it because you should have proper risk management and a strategy that's profitable. But just think as if that money's already gone and doesn't exist and you can't touch it anymore. Because that way, you're not going to care about it anymore. You've already put in $100. Think of it as a tuition, as a weekend out. It's something like that, right? $100 is not much. So just think of it. This is the money I'm putting in because I want to learn how to trade. But that money's already gone. That is my tuition to learn how to trade. I am paying this much to learn how to trade. That's going to the markets. You have to pay the markets in order to learn how to trade. Every single person, every single trader has paid the markets while learning how to trade. It's just inevitable. It's just what happened. Now, in saying that, trading, again, should be boring and routine. You stick to your plan. You're patient with it. you're disciplined by sticking to it, you're patient by waiting for it to play out, and that is every single day. As I said in the last lesson, I think this shit's boring, man. It's literally not fun. All the people on social media make it look fun, obviously, because they've already made it. They've already got the cars, the houses, all of that shit. I'm telling you that trading in the real world is not fun. Like, it's not meant to be fun. Obviously, yeah, we like to do it because we're traders and it's kind of fun to us. But in a sense, it shouldn't be fun. It's boring. You come in, you sit down, you do your work, do what you're supposed to do, you execute on the market, and you get out. That's it. That's the whole part of trading. It's done. It's quick and easy, and then you either make money or you lose money. You get on with the rest of your day. Now, for fear, I don't really have a homework to give you guys in terms of fear. Maybe watch a scary movie or something. Watch Wolf of Wall Street and just see how he's feared of the FBI agents, I guess. I don't know. There's not really a homework for me to give out in terms of doing some fear. But, guys, we are close to finishing this course, and you are close to having everything that you need in order to become successful traders. I know you can do it. You just have to fucking believe in yourself that you can do it. If you're telling yourself that you can do it, then get it done. The hardest part is when you feel like you're in the hardest and lowest point and just this shit's not working, blah, blah, blah. That is when the 90% of traders quit. And that is why that statistic is so small. It's because all of those traders give up when they think it's getting hard. When it's getting hard, that's just the market teaching you things. Those are the moments that you will learn the most on yourself, on your strategy, on everything. So basically, we're new traders. We should be wanting to take losses. We should be wanting the market to give us lessons. And believe me, the market is not afraid of giving you a lesson. So you can't be afraid of taking the lessons either. As long as we're learning from them. That's it for this lesson. I'll catch you in the next one. Hopefully you enjoyed this one. Check out Mark Douglas as well. On YouTube, there's I think like a seminar thing he did. It's like a 4-part video. I would highly recommend that. By watching that, you probably don't even need to watch my psychology videos, but still watch them because I'm definitely putting out some good information. And then, yeah, he's got books as well. Trading in the Zone is a book that I've read, and it's very good. I might talk about a little bit of something in a future lesson based on that book. But anyways, that is it for this one, and I'll see you in the next one.